Oh, man. Hi, I'm Peter Rose, founder of Longwood Currency Trading. I'll be with you in just a minute to talk about trading Forex after having major surgery. But first, some logs for the wood stove. But first, I had to get some coffee. I'm sorry. It's early January of 2025. And for the last 4 days, the wind has been blowing 40 miles an hour and it's been 4 below 0 Fahrenheit. Coffee. I'll be right with you. Promise. Okay, I got my coffee. We're in the kitchen. It's going to be a short video, I hope, because I can't stand on my leg very long. I had my left hip replaced, major surgery, December 11th, and this is January 10th, so I'm about 4 weeks out from that. The technology has improved greatly, and I'm doing fine. A little pain, but the muscles are weak, and I hurt sometimes. And well, what does that have to do with trading Forex? Well, the proverbial guidance for best practices for currency traders is if you're not feeling good, or you're emotionally distraught, or you're sick, or you have business things on your mind, or you're confused, then you shouldn't be trading because your attention is going to be fragmented and you're going to make a mistake. Okay, well, I just had major surgery. I was on high-powered drugs for a few weeks. I still am on some pain medication, and I'm trading Forex because I have no fear. I think that when you know what you're doing and you understand trading, then obtaining focus to what you're trying to do should be a relatively simple thing. If you're not as disciplined as I am, then you are going to have to take that advice, and you are going to have to not trade during times when you're not doing particularly well, either emotionally or physically. I'm in pain right now. We just went through the non-farm payroll event. I was there. I hit the button, triggered it. I made $2,100, closed it out. I'm done. $2,200. Okay, I'm done. That's fine. But done under the duress of coming out of these surgery. A month is pretty good to be out from surgery. But I was trading probably. I think I had the surgery the 11th, and I think I made my first trade after the surgery on the 19th. Overall, from the surgery to the 19th to where I am today, I'm probably up about 3% against risk. Now, I should be about 7% up or so against risk, but there was a glitch. In late December, I had a big trade on, called it right, and got out. I was up in the middle of the night taking pain meds, and I'm looking at the trading platform. I leave the thing open so I can look at it when I get up in the middle of the night, go to the bathroom and take my meds, whatever the hell I'm doing. And I said, oh my goodness, this is about to pop. I'm going to go in. So I went in with some limit orders and went up to bed, came back down a couple hours later. The price was moving dramatically in my favor, but then it started to retrace. So I kicked out of it, and I did fine and went back to bed. The problem with that is that I didn't cancel my reverse order, the get out of that position order. So when I got up in the morning, I was about $6,000 down. Now, I could have panicked and got out of the trade position at that point, but it was such a dramatic move that I decided I would hold on. Now, this is all early December, within a week and a half or so of my surgery. So one could question my sanity, first of all, in trading that soon to the surgery, and then having such a substantial mind blank that I wouldn't remove a pending order that's sitting there that should have been removed after I physically got out of the trade manually, got out of the position, and left the pending order to close active. And now I'm sitting with a $6,000 loss. And then to say, in that state of mind and physical presence after the surgery, that's the 19th, 23rd, something like that, 23rd of the month, I think it was, that I would make a decision to stay with a $6,000 running loss because I felt that the price had reacted so dramatically that there would have to be a retracement. There was every indication of regression to the mean. I didn't know what mean level we were going to regress to, whether 15-minute or 5-hour or 4-hour or whatever it was going to be. But it had all those symptoms for doing that. So I had the confidence that I would leave that on. And in fact, I carried that trade until almost the end of the month. There was one point where the trade was at a break even and it looked like it was going to continue in the direction. I didn't get out because I thought, well, if I was sitting here without having to trade on, I would put it on now anyway. And so I left the position on. It went a little bit in my favor. I think it probably took me up about $200 or $300, and then had a dramatic reversal. Remember, we're at the end of not only the end of December here, but we're at the end of the financial business cycles and all that stuff when everybody's rebalancing their accounts. The thing went back against me. I think I got out with a couple of $1,000 loss or $3,000 loss. So that took away quite a bit of the gains that I had made during December. So if I take that mind shit loss and say, well, if I would have been in the right mind and simply not been in the trade, when I closed out that trade manually, that I would have then closed all pending orders out, I would have been fine and would have closed the month of December up probably about a 2% gain against risk, which is pretty good having major surgery and not trading that many times after that surgery. In January, so far, I'm up, I think about 6.5%. And today is, like I said, the 10th, right after that non-farm payroll event. And that kicked me up a couple of $1,000. So that helps in pulling that percentage up. But 6%, 6.5% so far this year. If I would have gone back to the start of my surgical date and taken that $3,000 loss into effect, I'd still be up probably a couple of percent, 2.5%, and about 10 days into January with that. So there'd be a 30-day running balance up about 2%. So if you annualize that out, there's a 24% gain annualized in motion. If I ignore last year and say, well, that was just stupid, and I can blame it to the pain meds, I can blame it just to being stupid and forgetting to take a pending order off. We all do that at some point. You're not supposed to lose $6,000. I've only done that one time before, and I lost a lot of money. I lost about $22,000, something like that. I woke up in the morning and went, holy shit, what a mistake. And I just closed it. And then I went back in because of the volatility that was going on. And in the next 3 trades, I made $26,000 back. So I was okay. I made $4,000 over that debacle. This time on this particular $6,000 loss, I cut it back to, I think it was about $2,800 loss. I didn't go positive on it though. But I ran out of time because I didn't want to carry that trade into the new year. I just wanted to wash the deck and go into the new year clean. So going into the new year clean, I can pound my chest and say I'm up 6.5% so far, halfway through the month. So if I annualize that, I'll be up 10, 12% for the month. Maybe I'll be down 10 or 12%. I don't know, but right now I'm 6.5 up for the year against risk. Now, why try to make a case for trading after major surgery, or if you're depressed or in an emotional bad position, which I was, all of those things, and you are after any kind of major surgery like that? It just kicks the shit out of you. And there's nothing you can do about it. You can sit there and meditate and fill yourself up with drugs, but it still hurts and your brain still is screwed up. I did it because I'm unafraid, and because the best time to test yourself and to validate your process is in times of duress, not times of happiness. You know, I think Martin Luther King Jr. said the true test of a man's character is not where he stands in times of benefit and prosperity, but rather in time of duress. Something like that. I believe that. Because when you're trading, let's say you're emotionally okay and you're doing the day trade, and your dog gets run over and killed by a car, or you find out that you need to have an operation, or you have a falling out with your best friend, or whatever happens, and you're in the middle of that day trade, or maybe you're a position trader and you've got a lot of stuff going on. Maybe you have multi-positions going on over multiple products. And so now you were trading when you are in good shape. Now you're not in good shape. What are you supposed to do? Slam everything down, closed, because you're incapacitated? Yeah, I don't think so. I think you better be prepared to trade regardless of what your condition is. That's not to say that if you've been trading for 6 months or 2 or 3 years, that that's a good idea to train during times of physical or emotional duress. You need to be experienced. You need to have your trading based on a good, solid trading plan. And let me speak to that issue of your trading plan, because I've been talking with so many people lately that are trading, but they don't have a trading plan. They don't understand trading, and they're in there pushing buttons, and I don't know what the hell they're doing. Trading is a business. If you're going to have a business, I mean, look at this thing. I'm in the US, so I trade one full lot. That one full lot is controlling $100,000 worth of currency. Doesn't matter whether you're trading at 200 to 1 leverage or 10 to 1 leverage like I do. The product that you're trading is $100,000. That's what you've got out there at risk. So if you're trading a 10 lot, you're trading $1 million, right? So you trade the 10 lot 2 times a day, you're trading $2 million a day. That's what you're pushing around for product. So if you had a business and you did $2 million a day, and you were scraping 0.5% of that off of your risk of whatever it is that you put up, I mean, you know, that's a big business. That isn't something just you're going to sit down as a freaking mindless person watching some jackass on YouTube talking about fucking Fibonacci levels or London Open or oh, all you have to do is make 2% a day and you'll be a millionaire in 18 days. Please, just you have to. If you're not educated, if you're really young and you're not educated, you haven't been to school, you don't understand the educational process, you don't have life experience, you're going to fall prey to all these shitheads that are out there that are telling you crap. I'm 75 years old, okay? I've been studying the financial markets since the early 1970s, mid-1970s. Stocks, commodities, old tires, whatever you want to do. I started investing in real estate. I did that for 40 years and retired a millionaire because of my real estate investing. I was a software engineer for 33 years, designing complex business applications, enterprise level business application. I've been in martial arts for 55 years now, over 55 years in martial arts, and have students that have been with me for 40, 45 years, 50 years. So I've been around the block. I have a lot of experience. Do you need all that or any component of it in order to be a successful trader? No. But you better be able to figure out what those key component pieces are in order that you don't have risk of ruin, or that you're not out there just throwing shit against the wind, because you may very well be very successful. You may very well be able to take that $10,000 or $20,000 account and run that into the high six figures. But at some point, because you don't know what you're doing and you don't understand risk of ruin and you don't have a trading plan, you're going to lose it all. And if you're trading futures or stocks, you could lose your house and everything else, far more than what you put into the position. And you could do that even trading currencies. If your broker can't, your broker will close your position out if you remain under margin in 3 days. They give you 3 days. Well, what the fuck if the price moves against you so much that you go below margin, and the broker is sending you statements, emails saying, hey, you got to close your position or we're going to close it for you. You could be $300,000 underwater in 15 freaking minutes if you're over leveraged. The broker closes you out. Who do you think they're going to go to for that $300,000? They're going to come after you. Read your broker agreement. It's just because there's so much liquidity in the Forex market, and the brokers that you're dealing with, if they're legit, are large enough and are quite capable of saying, hey, this guy's in trouble, we're going to pull him out because we don't want to take the risk. Screw the client. They're not your friend. The broker's not your friend. He's making money on the spread. He's making money on your failures because he's only flushing he's taking the other side of your trade and flushing everything out to the interbank market at the end of the day. So if you're a jerk and you're losing and they took the other side of the trade, guess what? They win. And because 90% of the traders lose, the brokerage is a great deal to be in, but not when some fool is over leveraged and they go a couple $100,000 underwater. They're not going to let that happen. They're going to cut you off. The big brokers are. But the smaller brokers don't have those kinds of risk management controls. And quite frankly, they go out of business. And they take your money with it. So if you don't know what you're doing, if you don't have an organized plan, you're going to constantly put yourself in the line of fire. It's like if you've been living in the woods your whole life and you come out and you're going to cross a busy street, you don't really know that there's a traffic going back and forth. And you step out in the street and you don't get hit. Walk across the street to the restaurant and have lunch, and as you're walking back across the restaurant or across the street, you don't get hit again. So you do that 3 or 4 times and you're all right. Until the day you step out and you get mowed down by a Mack truck. That's what you're doing if you're out there trading currencies, listening to these people that are not preparing you correctly with a good basis of understanding, number 1, of the market itself, number 2, of trading, number 3, of integrating the market and the trading and you as a person. In other words, are you more suited toward long-term position trading? Are you going to be a scalper? Are you going to be a day trader? Are you going to swing? What is it that that your character and your personality are geared for? And now, how do you construct the business operations of your business? You're going to be pushing, a couple of $100,000 a day around in product. You better have a business plan for managing that business. How do you do tax records? When do you trade? All that kind of stuff. And then you better have a set of what I call in the trading plan. So you have your business operations in your trading plan. And the next thing that you need to create in the trading plan are your static metrics or static rules for your trading. What time of day are you going to trade? What's your risk? All that kind of stuff that's not going to change. If you're out there trading and you're saying, oh, today I'm going to take a $400 risk, and yesterday I took a $200 risk and it worked out okay, so today I'll take a $400 risk, and I'm looking for a 3-to-1 profit, and today I'll do a 2-to-1 profit to risk. I mean, you're just all over the place. So those, you need static rules that prevent you from having to solve a lot of trading problems in real time. That just makes the trading complex. You just want to be able to look at the screen and say, I got a position, I'm in. Okay, things are not looking too good, I'm out. Or things are looking pretty good, I'm going to add in, I'm going to build. Things are looking better, okay, I'm going to start staging in, and I already know, because of these static rules, where I'm going to stage and when I'm going to stage and where my stop's going to be in relationship to all that shit, where the current average price of the position is. That's your static rules for the market. And the third component in a trading plan is going to be the actual trading rules that you have. For example, as you know, if you've been watching my channel, I have what's called the life cycle of a currency position. I was a software engineer for 33 years, and we used what was called the software development life cycle, the SDLC, which is a complex methodology for the solution of complex software engineering problems. It makes the solution process simple. It's a complex process, but I took a rip of that and trimmed it down so that it works against the currency market, and I call it the life cycle of a currency position, because that's what we're concerned with. You hit bid ask, you have a position. You make another trade, you've added to that position. Now you're managing the trade. So you get into the trade, you got to manage it, and at some point you got to get out. So there's only three problems that you have to solve: entry analysis, position management, and exit methodology. Those are the three phases of the life cycle of a currency position. Couldn't be any simpler than that. Each phase has a rule. These are the rules that I'm talking about. They're your trading rules. Rules are based on conditions. If this condition is met and this condition is met, but this condition is not met, I don't do whatever it is I was supposed to do. If this condition is true, this condition is true, and the final condition is true, then I execute the rule. It's simple, because the conditions, the rules are in sequential order. The conditions within each rule are within sequential order, so you're not involved in a friggin' nightmare matrix of opportunities. You know, if I had 5 conditions for my rule, but there was no order or specificity to them, there was just 5 conditions. Well, let's talk about indicators. I got a MACD, I got a fib, I got a whatever. You get 5 of those. There's 325 different permutations you can put those 5 things in. If you only have 2 conditions, there's 4 permutations you can have those 2 things in. If I have object A and object B, I have 4 different ways that I can combine those 2 objects. I could use A alone, B alone, I could put AB together, and I could put BA together. 4 permutations for just 2 objects, 325 permutations for 5 objects. So you figure out how you're going to build rules that that contain gibberish. You have 325 different, or even 3. I think there's 19 permutations for 3 conditions in a rule. What are you going to do in real time? You're going to go through 21 different decision process in order to whether you're going to execute that rule or not. That's just ludicrous. But this is what I'm seeing. Nobody else talks about this because they want to blow smoke up your ass about how great their particular system is and how great it works for them, and they are able to make $30,000 a year on their $5,000 account or whatever it is. And that's great. Maybe they've got 5 years or 10 years of trading experience, and they've lost $200,000 or $300,000 binking along and trying to and just scrambling through things. They finally got it, and they can make that work. You're not going to be able to do that because they don't know how to teach that. They stumbled their way through. They learned how to trade, but they think that's because of a Fibonacci level or a Bollinger Band or a London Open. It has nothing to do with that, because from a mathematical standpoint, those things don't have any relationship with what's going on right now in the price. So when you are looking at getting involved in trading or taking what it is that you're doing in trading, why don't you back up from that a little bit and try to do the things that I'm talking about here to help you in this channel to better organize your thought process around the business of trading. so that when you are in situations of duress, you may not want to trade as actively as you have, but you can still trade. But you have to really understand how to focus, and you have to have a set of rules that aren't filled with these permutations that are just distracting for you. Anyway, my leg is starting to hurt standing here, so I'm gonna go take a pill and get on with my day. I have some emails to write to some students, so I'll get on and do that. Peter Rose, Longwood Currency Trading. Have a great day, and have a great trading day.